Good morning and welcome to Master Trader, where you can learn to use simple market and stock analysis to make money investing and trading. I'm Greg Capra. I'm going to take a look at the broader markets, and I'm going to tell you why all this concern about interest rates going up is really no concern. Before I do that, Dan and I have been broadcasting live to you from our new trading room, chat room. We have subscribers in there where we are giving trade recommendations, market updates, and so on, and lots of education. You can come and join us in the room at the website, there's memberships, and just click on the green room and you could subscribe and join us there. Okay, so let's start with the S&P futures here. They've pulled back exactly to where we wanted them to. You viewed the live trading room that we've been displaying there on YouTube. You see that I was talking exactly this kind of a pattern over the last day and looking for the turn to happen actually today or tomorrow. But as the pattern has shaped up here, it's doing exactly what we wanted. It dipped down yesterday, it came back up, and we're now looking for prices to push higher from here. The Nasdaq did pretty much the same thing. It pulled back, and it's got the turn day here. The angle of retracement is a little steep, but we'll see where this goes. So far, it's a good start. You can hear at pre-market, you can see it's up against this little resistance area there, which is yesterday's high. So we'll see if it gets through that. The Dow, we'll switch to same picture. Often it is the S&P and the Dow will often look very much the same. And here's that breakdown bar pattern failure that I had pointed out actually on the down day, looking for the turn to happen right down here. You could read about some of this in the chart of the week. It's a free service. Go to the site, sign up for it. You can read it right there. Oil has been doing very well. There was buyers on the dip. Notice this bottoming tail bar right here that poked under that low and turned into a bottoming tail bar. Now it's hanging here near this topping tail bar, so we'll see how it reacts. Right now it's having a little trouble there. Now, if it can go sideways there, that'll suggest that it can go higher. We'll be keeping an eye on that. A lot of the oil stocks have had a pretty good run here, coming out of this base, and buyers continue to step up intraday on dips. We'll see what they're going to do, if they're going to pull back. One that has defied gravity here and actually outperformed is Occidental Petroleum, and buyers have been stepping up on this dip even with this climactic sell setup here. So we'll be keeping an eye on that to see if buyers keep coming for it. It's already extended. It's near this resistance area here, so it's in a perfect place for at least to have a correction and possibly set up for us some intraday shorting possibilities. Now let's take a look at bonds and what they've been doing here. So short-term interest rates have been going up for quite a long time. This is nothing new. Actually, a couple of years now they've been going up. So in anticipating the Fed raising interest rates, it's been coming a long time. The 5-year broke out above the most recent highs last week. It looks like it'll continue to go higher. The 10-year did the same. The shorter end is moving a little faster, and the 30-year has not exceeded that prior high yet, but it looks like it's going to come from behind and eventually push up there. So the concern being that interest rates going higher is going to be competition for funds coming into equities, and that's a problem. Historically, that has not been a problem in the past unless they go extremely high, which right now they're still historically very low, because where are you going to put your money if interest rates were, say, at 6%, and you could put them there relatively risk-free or low risk compared to equity? So that's the thinking there. However, interest rates have been much higher than this in the past, and it was really of no concern to the markets. What we want to keep an eye on is called the yield curve, and there's been a lot of talk about a narrowing yield curve. Big deal. I guess they have to talk about something, but it's not until inversion happens where the shorter end gets above the longer end And then you can see even the last time that happened, the markets still moved up for a while before they flattened out and then rolled over at this time. And then the yield curve was spreads apart as the Fed lowers interest rates, and then that adds liquidity to the system, and the whole cycle starts again. So this is based on an improving economy, and eventually, if the Fed raises interest rates too much, the economy slows down, those interest rates that we looked at will stop going up. They'll go sideways or lower, and then we may have this happen. So not until this actually inverts, if it does, do we really have a concern for the markets from a long-term perspective. They have been correcting since the run-up at the beginning of the year, and that's what markets do. They go through periods of correction after moves higher, and then they go higher again. So this is our view from a long-term perspective, is that's where the markets are going, and what we're seeing here is just a correction after this big move, and eventually the volatility begins to tighten up, which it is beginning to do, and excuse me, and eventually the markets will go higher. And markets have corrections along the way, which is normal. So don't get all hyped up listening to the media and all of their concerns. They have to talk about something. So follow the charts. Visit us at mastertrader.com. Take a trial to our letter, where I write extensively to update subscribers about what's happening in the broader markets, in addition to the recommendations that we provide. Good trading, everyone. And I said you can stop into the chat room, subscribe there, and get a tremendous amount of education as well as trading recommendations. Good trading.